You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast.
Well, it's certainly been an exciting week for you, Brandon. Congratulations on 100,000 subscribers on the YouTube channel.
Yay! Thank you. It's been a while, but I finally got there. Woohoo!
Yeah, it's awesome. Huge achievement. Do you know how many YouTube videos you've done since you started?
A lot. It's been a lot. I don't actually know the number.
You'd have to be in the 300 or 400s, right?
300-400. Yeah, easy. Yeah, it's been a lot. I'm trying to find, but yeah, it's at least 300. But yeah, 300, 3 years. Yeah, it's been a good ride. So it's a good achievement. I get a silver play button. How cool is that?
It's exactly what I was going to say. Yeah, I wonder how long they take to send that out. Hopefully not too long.
I don't know. Yeah, hopefully not too. Well, I mean, I don't know. It's not like I'm waiting for it. But yeah, that'd be cool. I'm excited. Thanks to everyone who's subscribed over the years. It's a pretty cool achievement. I'm pretty happy to have gotten there.
Yeah, definitely. I thought I was catching you for a while there, but then
I thought you were too.
These last few months, you've just... Yeah. How many subscribers have come in the last couple of months? It must be like 30 or 40, right?
30 or 40 subscribers.
30 or 40 subscribers in the last couple of months. Nice.
Total.
You've been on 99 for like a year.
Audience. Let's do the last 90 days. Wow. 41,000 subscribers in the last 90 days. So
there you go.
That's a lot of people in not much time.
That is a snapshot of the YouTube game. In one sentence, the fact that you can almost double 50% increase your subscriber base. In a handful of months. It's crazy.
In the whole of 2019, I gained 33,800 subscribers.
Wow.
And then in 2020, it's been 53 already. We're only halfway there. It's pretty remarkable. It's pretty remarkable. And it's just crazy because like people don't, like they say, it's not just the algorithm, but sometimes it really just is that algorithm. It's just how well you slot yourself into that magical YouTube algorithm. Because I haven't really been doing too much stuff that's been different to increase the amount of subscribers. It's not like I've doubled my output of videos or anything like that.
Yeah,
it's just that more of my videos have gained popularity and have snowballed in the YouTube algorithm. So
yeah, it's often so hard to sort of pinpoint. You can't really look back and be like, okay, how do I, or at least this has been my experience. I can't really look back and think, okay, this is why I grew so much in this certain period. It kind of seems partly there might be some changes that you do, but a lot of the time it's just, you just have no idea why your channel did so well over a short period of time. But you've certainly been making some, have you been making more content recently? I feel like I've seen more videos from you.
Well, I mean, I'm usually 2 a week.
Right.
There was a few weeks where I tried to get 3 out. And then I've been making these new courses for Profitful over the past little while. So I haven't put out 3 videos in a week for a while now, because I've just, all of my time has just been editing. So editing these Profitful courses, which should be coming out in about 2 weeks. So stay tuned if you're a Profitful customer or potential customer.
Yeah, and now you'll just have to set your sights on the next big milestone, the golden plaque.
Yeah.
The 1 million.
That is I don't think I could ever get to 1 million. 1 million is ridiculous. That is so many people.
Yeah, it is.
You actually need to be like a celebrity almost.
Yeah.
I can't imagine myself ever getting to 1 million, but you never know.
That being
I
said,
never imagined I'd get to 100,000. So
exactly, when I was getting started, there was no way I ever thought that would be possible. But now I would think that, it's something that is possible. Whether or not I'll get there, I don't know, but certainly something that's possible. But
well, I mean, it's a 10x from where I am at the moment, and it wasn't too long ago that I was at 10,000 subscribers.
right.
So, I mean, I guess it just depends on what if the rate of growth stays the same, then I guess there is a shot, but I wouldn't count on it. Let's put it that way.
Yeah.
Anyway,
Should we get into today's sponsor?
Yeah, let's do
so
it.
of course, as always, our sponsor is Sharesight. So basically, Sharesight's an application that you can use to track the performance of your portfolio and also to sort of help you with tax time. And basically, in terms of tracking the performance of your portfolio, it's great for keeping track of all of the different types of gains. So capital gains, most people keep track of. Some people keep track of dividends, but it's a little bit more tricky if you have dividend reinvestment plans. But one thing that I know that most people don't keep track of is currency. And it's actually super important if you're buying shares internationally, or even if you just hold foreign currencies, to be tracking all three of those kinds of returns and seeing how they all contribute to your overall return. And then, as I mentioned, that sort of the other thing that you can use Sharesight for is when it comes to tax time. So Sharesight generates up to 10 different reports that can be used at tax time to easily work out things such as your capital gains, dividend income, and more. And at the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT. And also, if you use that link, you can either sign up to a free plan that you can use forever. So there's absolutely no risk on your part to go check that out. Or you can sign up to a paid plan. And if you sign up to a yearly paid plan, you can get 4 months free.
4 months.
So
4 months free.
Go out and do that.
Do it.
Particularly if
it's a good time.
Yeah,
it's a good time to do it as well. Like, it's just ticked over the start of the new financial year. So, I mean, if you want to set yourself up for the whole 2020, 2021 financial year, then yeah, it's probably a good idea to make a move on that now.
Yeah, no, definitely. And I mean, I know so many people who have sent me these like fancy spreadsheets that they've made to keep track of their portfolio, and I think, well, that's brilliant. I don't know how you did it, but you could have just used something like Sharesight and don't have to think about it. But go check that out if you guys are interested.
Thanks, Sharesight.
Thank you.
All right. Well, let's dive into it. What do we got to talk about today? Interesting news out of Facebook, right?
Yeah. So this has been going on for a little while now, but I thought maybe now was a good time to talk about it because Mark Zuckerberg, the CEO, actually came out and made a statement about it. So basically, Facebook's sort of been facing this advertising boycott over the past week and a little bit. And basically, there's been there's actually 400 big advertisers, big companies that have withdrawn their advertising budgets from Facebook. So basically, they're trying to get Facebook to change their policy on freedom of speech. That's basically the core of what's going on here. And yeah, as I mentioned, this has sort of been going on for a little while, and it did significantly impact Facebook's stock price for a little while. But now sort of Zuckerberg's come out and said his 2 cents on it. So we'll talk about that in just a little bit. But
yeah,
I guess the core of the demands that these companies are making. So there's a hashtag going around. It's an actual campaign that all of these companies are sort of signed up to.
Right.
And basically the core of the demand is that Facebook should do more to remove hate speech from the platform.
They want more. Okay.
Yeah, so they want Facebook to do more to sort of remove things from the site. Particularly, a couple of the things that they mentioned were racist content, and that's kind of come out of everything that's sort of been going on over the past couple months. And then also misinformation on the platform. So they want Facebook to take action on information that they deem to be misinformative.
Right. Okay. Yeah.
Yeah.
Oh, that's interesting.
It is.
I would have thought that it would have been the other way around. I would have thought that Facebook would have said, we're going to limit, or we're going to focus more on taking down things, and then the advertisers would have come out and said, oh, we don't like that. We want you to let everyone say whatever they want, because it's probably in their best interest to be able to say whatever the hell they want.
Yeah.
So that surprised me that it's actually the other way around. They want Facebook to do more.
Yeah, I don't know why companies do things like that. I mean, part of it has got to be just to look good, to be on the side of the be on the right side of something. And Twitter's taken a little bit more of a stance on removing racist content and misinformation, whereas Zuckerberg has come out over the past year or so and basically said, while in the past Facebook looked as though they were heading in that direction too, he wants, basically his position is that a private company like Facebook shouldn't be deciding what is deemed racist or misinformation, and that as much information out there as possible is a good thing. This is his position, not necessarily mine. But give everyone as much information as possible so that they can see both sides and reach their own opinions, I guess, on certain things. But
I can kind of see where he comes from there, where it's fair enough. He can take the stance of, hey, we're just the platform. What people do with the platform, it's kind of like, I don't know, maybe I'm not sure what another good example is. Something like Java or something like that. It's like people can do whatever the hell they want with our bit of code or whatever. Some people do it for, use it for really bad things. Most people use it for really good, but we're just providing the code. It's like Facebook's just providing the platform. But yeah, I guess, I don't know, with so many billions of people that use Facebook, I think there probably is a place for the higher ups at Facebook to make sure that they make sure that everything on their platform is, I guess, more trustworthy and encourages being nice to one another.
Yeah, I mean, certainly there has to be some level of moderation, and the debate is around what level. I think I tend to side more with Zuckerberg in that I like that. I just don't want to. I would disagree with a private company deciding what is misinformation, because some things are clearly misinformation, but there's other things where it's not entirely clear whether something is false or not. There's sort of no way to actually know. There's just kind of facts on both sides, and I would not want a private company stopping me from seeing one side of the information because they deem it misinformation. But that's sort of what's going on at the moment. And as I said, there's 400 companies in total, so actually quite a lot of big companies. And there's some big names that everyone would be aware of that are involved in this. So some of the major ones that I just picked out looking at the list were Adidas, Verizon, Levi Strauss, Microsoft, Starbucks, and Coca-Cola were a couple of the big ones that stood out to me.
Right. Yeah, that is quite a few names. Although 400, they would have massive advertising budgets, those guys. But I guess like 400 advertisers compared to how many, I don't even know, millions, hundreds of thousands of businesses that advertise on Facebook, it probably doesn't put much of a dent in it. Yeah, well, the actual number of advertisers on the platform is 8 million. So 8 million. So there's 8 million advertisers, and obviously within these 400, they are, as you mentioned, there's some of the larger ones. There's probably some, I know I did some advertising on there and I probably spent, a couple $1,000s on advertising, whereas these guys are spending hundreds of millions of dollars in some cases. But there's certainly millions of companies that are advertising on the platform, and in the article that I was reading, analysts are estimating that there will be less than a 5% hit to revenue from this boycott. And 5% isn't nothing. It's significant. But it's certainly not, it's not 40% or something. It's not crippling the business. And Zuckerberg came out and made a statement this week. And his response was, and this is a quote, "All these advertisers will be back soon." Oh my God. They'll be back. Just watch them.
It's true. And I can't remember where I spoke about this. I spoke about it somewhere, maybe in a video or maybe to some of the members in my group. But basically between Facebook and Google, they have so much power over these companies because of how good their service is. It's so much cheaper. If you just lump them together, you could try and distinguish between the two, but if you just lump those two together and call it 90% of the online advertising market, it crushes the traditional advertising or other options that these big companies could go to in terms of price, and then also the ability to target specific types of people that would be more likely to be their clients or customers. So
Yeah, true. Facebook definitely has the power in this one because you're totally right. They're definitely coming crawling back. There's no way that a company like Coca-Cola is just going to cease using Facebook for their advertising for the rest of eternity. No way.
Yeah, and I mean,
no way.
It might be a 5% hit overall to Facebook's business if this kept going, but to something like a Levi Strauss, which is the biggest jeans company in the US, biggest jeans brand in the US, I wonder how much
What's
money.
their hit?
Yeah, exactly. What's their hit if they're not spending 50 million on advertising and making 600 million back or what? I don't even know what it would be, but they're obviously making money from their online advertisements. What's their hit going to be? Probably more significant than Facebook's.
Yeah, definitely. Yeah, the damage to these to the advertisers not advertising on Facebook, I imagine would be substantially higher than the hit that they're going to make to to Facebook's bottom line.
Yeah.
But interesting. I don't know. I think it probably is just these companies trying to stand on the side of what most people agree with, just to look as good as possible.
Yeah, I think so.
They're all secretly teaming up and they're going to take Facebook down.
It's like next week, 6 million advertisers join the boycott.
Yeah. Everyone's going to band together and they're going to withdraw from Facebook, drive the stock price down, and then they're all going to have a takeover.
Yeah. Wonder how
Facebook's going to get taken over.
How many of the executives in these 400 companies are buying shares of Facebook while it's dropped 10% this week? How many?
Oh, that's some dodgy dealings right there. Anyway, but yeah, very interesting out of Facebook. See what happens with that one.
Yeah.
What should we talk about next? Oh, this is interesting. Woolies got fined only $1 million. When we talk about fines, I think usually we're talking about billions of dollars when it's like Google or Facebook. But Woolies gets fined $1 million for breaching media laws, but it's still kind of significant because they've paid the largest fine ever handed down by Australia's media watchdog after the supermarket giant was found to have sent more than 5 million emails to customers who had unsubscribed from mailing lists.
Oh, no.
So that's pretty dodgy. I mean, you got to be able to unsubscribe, surely.
Those companies are my least favorite, where you unsubscribe and you've unsubscribed, and they still come in. That bothers me more than anything in the world. It says here, an investigation found the company continued to send marketing emails to some customers who had tried to unsubscribe several times. Oh, God.
It's pretty funny. The Australia Communications and Media Authority issued Woolworths with a just over $1 million fine for the significant breach of spamming laws between October 2018 and July 2019. Man, that's crazy. I mean, if people unsubscribe, they don't want what you're selling. I mean, it's pretty obvious. How if you unsubscribed from a mailing list, there is just, and then they continued to send you more emails. What is the conversion rate on that? Seriously. Like, if you've taken the time to actually make an effort to unsubscribe from the mailing list, I mean, you're doing that for a reason. So surely those people that you are emailing that just went off the mailing list, surely you're not getting any sales from those people. Surely.
Oh, not at all. I would struggle to believe that they would intentionally send emails to people who would unsubscribe, just because, I mean, I know for my list, I don't even know the people who have unsubscribed because it just does it automatically. So my thought would be that there's been a breakdown in this unsubscribe button, that it's not actually taking them off the list, rather than them thinking, oh boy, we've got 1 million people on this list that unsubscribed, but let's blast
that makes
them
sense.
I don't know. I mean, maybe
well, it makes sense. So you reckon they're just copying the fine because it's happened, not because they have actually tried to do that. I mean, it's just something that has happened, therefore they cop a fine because that's against the law or something.
I would say so. I mean, what you just
I probably agree.
What you said just makes complete sense. Like, why would you want to send more emails to people who have unsubscribed? That's just going to make them hate you even more, and they're certainly not going to buy something from you. So I'm not sure.
Interesting, but I thought I'd chuck that one in. Biggest fine ever handed down by the Australian Media Watchdog. There you go.
They clearly don't hand out many big fines to big companies.
I was going to say. Clearly Australian businesses have been doing pretty well in the media space. That surprises me, to be honest.
They need to take a leaf out of the EU's book. Bloody $8 billion fine on Google. Thank you.
Lay down those fines. Send them bankrupt. Go after everything they got. Here's another funny story that I saw pop up. Do you know that Australia has a new logo?
Yeah, I did see this.
Oh, you did see this?
Yeah.
Gosh. Apparently, it's costing Australian taxpayers $10 million for this new Australia logo.
What?
Yeah, apparently so. Apparently it's a $10 million logo, which is pretty hilarious because it looks like a virus.
They do know they can just go over to Fiverr and get one for $20 or $5.
$5, $10. Yeah, exactly right. Imagine if you were the guy on Fiverr that gets that email from the Australian government saying, "Hey, we just need you to design a new logo for Australia." I think I should charge them more for this. No, it's all right. Look, I usually do it for about $10. Do you want a 1-day turnaround? All right, I'll get straight to it.
Government's like $10 million. Really? Is that typical?
Yeah.
Yes, it is. Yes, sir, it is.
Oh, that's hilarious. But yeah, man, what have they done right now with all this stuff going on in the world with coronavirus? They've designed it. It's supposed to resemble Australia's native golden wattle.
It does not.
But it doesn't. It just looks like a virus. It looks like like the molecule, the cell, the virus cell, how it gets depicted in animations with all of the little things coming out of the side with the sphere in the middle. It just looks like one of those. It looks like coronavirus.
Yeah.
Come on.
What was wrong with the old one? The old one with
I don't know, what was the old one?
The old one was the kangaroo with the triangle. That's what it was, I think.
Oh, okay. Yeah, that's weird.
That you see stamped on everything.
What was wrong with that? That's a good logo.
Iconic. Green and gold.
It is iconic.
Kangaroo.
Most Australians would definitely recognize what that logo is.
Yeah, I wouldn't know what this is. I mean, it's gold colored and it says AU, which is the chemical symbol for gold.
For gold. Yeah.
So it's just confusing.
May contain traces of gold. But there you go. Apparently it's Australia.
It's ridiculous.
That is absolutely ridiculous. Let's spark some controversy. That's what we need on the Young Investors podcast. More controversy.
Boycott.
Scott Morrison, we're calling you out. $10 million for the taxpayer. That's unbelievable. That's a disgrace. Your government's a disgrace. Man, imagine if we just turned into some, I don't know, like Alan Jones radio show where we're just sparking controversy. That's all we do here. We don't even give any information whatsoever. We just spark controversy.
Just add a bit of anger to someone's day.
Yeah. Make someone angry. That's our goal. How sad is it that that's actually what the goal of those talkback shows are? We got to spark some fire deep within some other person.
Yeah, real sad. Real sad.
Anyway, Australia, come on, fix your logo. Jesus. Anyway.
What else have we got?
What else do we have?
Actually, we should discuss this. This is super important because we got a comment on the last podcast and someone said that we need more discussions on Chipotlanes.
Oh, geez.
And
I would like to talk very much so about Chipotlanes. They're some of my favorite things to talk about. But didn't we hear in the last quarter earnings release that they didn't add any more Chipotlanes?
They didn't.
Wasn't that?
Yeah,
they didn't.
I actually went back this morning and I
checked.
spent a long time this morning looking specifically for Chipotlane news.
Well, because you want to be sure, right?
Yeah, exactly. You wouldn't want to miss any. And sadly, there was no update. And although maybe some positive news coming. So we've got Q2 earnings, which will be coming out for Chipotle on July 22nd. So what's that? Couple of weeks, 3 weeks?
Couple weeks. Hang in there, guys. Hang in there. It's coming.
It is coming. All right. And I can't promise you that the CEO will talk about the Chipotlanes, but
he'd be silly not to.
He would be silly not to. Yeah.
I reckon what we should do is we should franchise here in Australia Chipotlanes. We shouldn't franchise Chipotle. I think we should just franchise the idea of the Chipotlane.
I like it. You know what? If Gally
Yeah.
can get a question on Tesla's call, I'm going to
Yeah.
get a question on Chipotle's call.
Imagine
and just ask
Imagine
him.
if you got on the Chipotle conference call and you just trolled them with just a dumb, hilarious
Hey mate,
question.
how many new Chipotlanes have been installed in the past 3 months? And how many can we expect?
I'd ask him like, hey, I just wanted to know if you had approached KFC or McDonald's replacing their drive-throughs with Chipotlanes. I would totally say that. I would say that on a conference call. But yeah, I reckon there's so many opportunities. If we franchise the Chipotlane, we could go around to Woolworths. They could have a Chipotlane. Obviously, we could replace the McDonald's drive-through. I mean, that's just a no-brainer.
Yeah,
replace it with the
makes
Chipotlane.
total sense.
There are so many businesses that I think would benefit from having a Chipotlane. So
It's
I don't know. I'll send an email to the CEO, see what he thinks.
Yeah.
I'm sure he'll get back to me. I'll just be like, hey, I'm Brandon, you know, that YouTuber. I've got like 100,000 subscribers now.
it just goes straight to the top of his priority email as soon as you include 100,000 subscribers.
Nothing less. Oh my gosh. We really need to be careful, Hamish. People, they keep telling us that we need to use sarcasm sparingly.
We need a sarcasm warning.
Anyway, yeah, we do. Yeah.
But,
anyway, back to the news. Here's something interesting. So the US, as we know, they've been laxing their lockdown restrictions. And current estimates is that they could soon be seeing over 100,000 new COVID-19 cases per day.
Whoa. That's a lot of cases.
Yeah. The article reads, the country's death toll currently sits at 130,000, with a quarter of the world's cases, despite only having 4% of the world's population. To make matters worse, the country's top infectious diseases expert, Dr. Anthony Fauci, has warned it could end up with over 100,000 new cases per day as it begins to transition out of the lockdown. Clearly, we are not in control right now, he told a Senate hearing, noting that many Americans were not distancing themselves or not wearing masks. We're now having 40,000+ new cases a day. I would not be surprised if we go up to 100,000 per day if this does not turn around. So I'm very concerned. That's pretty crazy. So they're adding more than 40,000 new cases a day at the moment. 40,000.
Yeah, that's insane. When our cases in Australia the daily cases kind of peaked and then it went down, I just presumed that, I wasn't looking at the news anymore, so I just presumed that was kind of the case with everyone around the world, or at least in the sort of major places. But I had a look at California's numbers, for example, the other day, and there was really no point in which it slowed down. It did sort of the acceleration of the number of cases per day slowed down, but the actual number of cases didn't really slow down at all. It's terrifying that they're having that many cases, particularly when I turn on the news and we're freaking out about 30 or 40 cases. It's insane, isn't it? 100,000 cases a day they could be facing soon.
It's insane. I mean, I'm no infectious diseases expert, but you've got to look at something like 100,000 new COVID cases per day. And I don't know, if I was looking at that, I'd start to think, we can no longer stop this. Like, how can you stop that when so many people have COVID-19 that there's 100,000 new cases per day? I don't even know how you could slow that down. You would have to literally lock everyone up, and people cannot come close to another person to try and get the disease to slow down, because it's just so many people that have it at that time that I just feel like I said, I'm no expert, but I feel like it would be very, very hard to slow it down if there's that many people that are getting it each day. I don't know.
Yeah, you would think so. I mean, what's even going to happen if they get to that rate? It's just everyone going to get it at some point.
I mean, here in Australia, if 40 people have it, or there's 40 new cases, at least you can kind of get on top of those 40 people and say, okay, for you 40, you really need to lock down. Don't come into contact. But imagine trying to get that to happen with 100,000 new people every single day.
Not possible.
I don't know.
Maybe.
Yeah, maybe it is. I don't know. But I would think that would be very, very hard. Anyway.
Yeah, certainly scary. Certainly glad to be an Australian in this circumstance.
Yeah, in this circumstance, definitely.
Yeah.
Definitely, yeah. Anyway, so with that said, let's move on. Last news topic for today. Do you want to take us through this, or do you want me to run through it? I don't mind.
You can run through it. We've got some news out of the housing market in Australia.
Yeah. So housing industry looking a little bit sketchy at the moment. So it says here, Australia's new home approvals fell to their lowest level in 7 years in May. So it says the number of dwelling approvals nationwide tumbled by 2,500, about 16%, to just 12,736 across the month, according to new ABS figures. It says here, approvals are the chief indicator of future home construction, and a reduction in the pipeline has been anticipated since the nation went into lockdown due to, of course, our old mate COVID-19.
Right. So this is in relation to the approvals for home construction, for new homes being built.
Yep. New home approvals. Yep. So fallen to its lowest level since January 2013.
Whoa.
So pretty crazy. But I was reading, they got someone from the Housing Industry Association to do a little bit of a talk piece on this finding, and they said that this was totally expected. They definitely saw something like this happening. But they also said that home builder is likely to have that home builder plan that they announced at, I think it was like this, when was it? Not a couple of weeks ago, a few weeks ago.
Not very long ago.
Yeah, but they say it's likely to have some impact, but we just won't see that impact reflected in the data for a fair while yet, which makes sense. So
yeah, I was going to mention.
We're seeing these numbers that happened a fair while ago, so it's kind of no surprise that it fell so much.
Yeah, and I was going to say, because the government just brought out that plan to have more construction work for people, because this was expected, right? So I guess it's a little.
So maybe that'll have a good impact.
Yeah, it's a bit of a case of kind of looking backwards on data. It's kind of like how we talk about how we're in a recession at the moment, but recession data is always going to be looking backwards. So
yeah, definitely after the quarters ended.
Yeah, interesting.
Yeah, but interesting. Yeah, definitely struggle street for the Australian construction industry. That's for sure.
Yeah.
All right. With that said, that's a nice, happy way to finish out the news. That's nice.
Sarcasm alert.
Yeah, sarcasm. That was not a happy way to finish the. Imagine it. I couldn't do a podcast where I was like completely serious.
No.
And that is some terrible news to finish the news section of the podcast. Now moving into Q&A. It'd just be it's the most boring podcast ever. Anyway, let's do some Q&A questions. What do we got?
Yeah. All right. I'll ask this one to you because it's actually a question that was directed directly to you. Lately, I've seen several articles talking about Chinese car manufacturer NIO as the new big thing in the EV market. What is your opinion about it? And also, do you think there are any traditional car manufacturers that could endanger Tesla in the long term?
Yeah, NIO's been one of those stocks that I've been meaning to look into. Honestly, I haven't even looked into it yet. I haven't looked into very many stocks lately, to be perfectly honest, which is kind of sad because all of my time has just been sapped. So I'm keen to get back into it. But in terms of I couldn't tell you. As what I understand is that NIO is very kind of newish, but not quite on the same scale as what Tesla's doing. But I don't quite understand the Chinese EV market well enough. Do I think that there's any traditional car manufacturers that could endanger Tesla in the long term? Look, potentially, but I would probably say probably not at the moment. We're still in what we're seeing in the EV kind of transition is that a lot of the major automakers are trying to fake their way into the EV market. So they're kind of saying or doing presentations where they're like, we're getting serious about electric vehicles. And they're like, but it's basically just all talk, and then they actually do nothing. So, and that's why, I mean, it's pretty obvious that electric vehicles are definitely the way of future transportation. I mean, I feel like that's pretty obvious at this point. So you would think that it's in these traditional auto manufacturers' best interest to make the transition, but they're just not committing to it yet, which is crazy, because when you get a company like Tesla that's led by Elon, who is at his roots a hardcore engineer, he loves the engineering, he loves the innovation, and the engineering innovation. He is just going to keep his foot to the floor in trying to get more out of his cars, get better range, get better battery tech and better drivetrain efficiency and blah blah blah. So I honestly do not think that any traditional car manufacturer is going to endanger Tesla in a long time. They've also got a lot of money tied up in manufacturing internal combustion engine cars, and they're going to have to take a massive hit on their balance sheets if they start to retool those factories for electric vehicles. I mean, they don't even have the technology anywhere near what Tesla's got at the moment. Tesla's about to start making their own cells as well. Their electric drivetrain is the most efficient electric drivetrain in the world. So. And plus, none of the other auto manufacturers have any idea how to make an autonomous vehicle, whereas Tesla's getting real close. So
there you go. You heard it from the man.
You heard it. You heard it here first. No, you didn't hear it here first, but that's my opinion. Anyway, so yeah, that's what I got to think about that. Here we go. Oh, this is kind of going on from what I just said. Roughly how many hours a week do you guys spend researching stocks, including research related to YouTube?
Oh, that's an interesting question. Oh man, to put a number on it. I mean,
it's hard, isn't it?
Certainly every day I'm looking at stuff. Just throughout the day. I don't know what that might add up to, maybe an hour total or something like that, maybe a little bit more. So basically, I mean, my research into businesses has been a lot more structured just because of the program that I run, and within that program, I research companies and then sort of provide analysis as a case study. So that sort of leads me to spending a few days where I'm doing quite a lot, where that entire day or 2-day period is just complete research. So those days a fair bit more, but in any given week, I don't know, maybe, I'm not sure, maybe 8 to 10 hours maybe or something like that.
7, 8, yeah, something like that. Yeah. I mean, and it ebbs and flows, right? So for instance, now is a pretty quiet time, and then at the end of July when the Q2 numbers come out, then we're going to be doing heaps and heaps and heaps of research, because we'll be listening to heaps of conference calls and we'll be looking at quarterly data and that sort of stuff. So it's kind of got ebbs and flows like that, but I kind of normally I'd agree with you. I maybe end up just from YouTube stuff that and just reading reports and news and that sort of stuff. Maybe it's like 45 minutes or an hour. Lately, like I said before, I've just been so swamped. My time has been so drained. So I really need to get back into it, do some stock analysis. But yeah, that's probably I probably agree with you. Maybe like end up being an hour a day.
Yeah. Yeah, okay.
It probably ends up being more. You just don't realize it, because we're so interested in this stuff. We probably just consume it without even like noting it down as stock research.
Yeah, exactly. Like,
so I don't know.
Yeah, I mean, like a typical workday for both of us, I guess, is that we're waking up and we're thinking, okay, I might make a video, or you're editing or making something for Profitful, or I'm talking with some of the students, and throughout that process, it's not as if it's just starting to create a video and then 4 hours later, a video's finished. Like it's, doing some planning and then, research this, or this news article came up about this business, and I start, reading about that. So yeah, certainly it would be more than, it would be interesting to kind of track that over a week or over a 2-week period and kind of just see where where sort of time goes in terms of researching stocks and then other things as well. But yeah, I'm not sure.
What consequences will a lengthy depressed market or a prolonged stagnant market have on an equities portfolio? Can you still get a healthy growth of, more than 10% annually in such an environment? What are your thoughts on this? This is an interesting question, actually.
Yeah, I mean, certainly if the market is, so if you just bought into, let's talk about indexes first, I guess, because that's what most people is applicable to most people. If you just buy the index once and then we go into a depressed market, then it's very likely that your portfolio is not going to do very well. But if the market's down for a long time and you have a habit of consistently contributing and you have that philosophy that, okay, the market's going down, I don't really know what's going to happen over the next year, but I know that over the long term, businesses broadly will be more productive. So if I just keep contributing, then if you're doing that, then you're going to be buying quite a lot of stock while the market's gone down. And as a result, that should certainly help your return over the long term. If the market is stagnant, well, I mean, it kind of depends on what you mean by stagnant. Do you mean it goes down and then up again and then it's flat over a 10-year period? Or do you mean it goes up and down during that period? Or just, it really just is flat over that period?
I reckon just flat, yeah.
Yeah, I mean, if it's just flat over that period, then obviously as an index fund investor, it's going to be, then your return is going to be pretty flat. And that's kind of where some people want to take a little bit more control and pick individual businesses, because even though a market can be going down substantially or flat over a long period of time, individual businesses will fluctuate. So while if a market was completely flat for 10 years, there could be businesses that are going up and down in that time where if you've analyzed them properly, it's a great business and you purchase it only when it's cheap, that you could make still a substantial return while the market doesn't do too well.
Yeah, definitely. Yeah, I'd agree. Like when it comes to index investing, you get what the market gets. If the market's stagnant, that's what you get. It might be stagnant for a long period of time, but over the long run, if you hold it for like 4 or 5 decades, then you probably do pretty damn well. And like what you said, you're buying when it's low. But there are plenty of stocks that go up a lot, even when the market is going down. I mean, generally speaking, if the market's stagnant, it's harder for most stocks to go up because a lot of stocks just kind of trend up with the market, especially if they're included in big indexes or indices. But there are still plenty of businesses that do really, really well and get great returns for their shareholders, even in bad conditions. I mean, it's what we always come back to. It's like a case-by-case basis. I mean, for instance, we can even look at what's happened recently. Things like, everyone stays home, coronavirus, blah, 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 and most businesses have to shut down and everything's just hitting the fan. And then Google come out and they say, oh, look, we've had such a massive spike in Google searching. We've had this massive spike in people watching YouTube videos now. So there's like always businesses that'll do well no matter what. So there's always opportunities. If you're a stock picker, if you're an active investor, there's always opportunities out there, no matter what the market's doing.
Yeah, and I mean, the secret is if you're index fund investing, you're investing broadly and you have a long horizon in front of you, a number of decades in front of you, even though something like a depressed market would usually be a result of poor economic conditions, which is certainly not a good thing for people, but conditions like that is almost good for an investor. The opportunity to invest in companies when they're really, really cheap is like the best thing for a long-term investor. So, I mean, certainly what causes the market to go down is not a good thing, but when it is a reality that the market is down, that can be some of the best opportunities to invest if you have a long horizon.
Yep. Yeah. I want to do this question up next. Wanted to ask you guys what your respective goals are moving forward. So they say a couple of things. Do you aim to, say, manage a fund later down the line? Have you considered working at a hedge fund or in equities research? Or curious on your aspirations and thoughts on alternate careers?
Yeah, that's interesting. I was going to say we could take these one by one, but they're all kind of related. So we can just sort of merge them together.
Oh, we can do it one by one? Well, do you want to one day operate a fund, manage a fund down the line?
I mean, I wouldn't rule it out. I mean, the thing with managing a fund is that if you want to set up a fund, you first need to have a huge track record of returns, like over a number of years. So it's not something that I would try to do probably for at least 10 years, maybe even substantially longer than that. But I wouldn't rule it out. It could be certainly.
I'd definitely rule this one out for me.
Really?
Yeah. I don't want to be responsible for other people's money. I mean, I don't even show my portfolio on the channel anymore just because I don't want people to potentially copy the investments that I've made. I just don't want to be the person responsible for other people's money because I just feel so bad. I mean, they put their faith in you, they invest, and what if you say, okay, look, give me 10, 15 years and I will do it for you. And then, 5 years and you're still waiting for a return because the market's been shit. And then all of a sudden these people have been like, oh, you said you'd make us money. I'm like, but come on, give me some time. Come on, please. It's like, no, we want returns now. Rah, 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 rah. And like,
Yeah, if I was going to do it, it would be unlikely that it would be a fund and more the route that Warren Buffett went, where he just had a company that was a portfolio of businesses that he took public and people invested in, rather than taking people's money with an investment goal and a target return, and collecting a fee for managing money. I would much rather just build a really large company, and maybe part of that company is investing in individual businesses that hopefully do quite well over the long term. And then if that goes public and you have investors, it's pretty similar to running a fund. It's just a little bit different. But yeah, I certainly wouldn't rule that out. But I at the moment, at least, I certainly like what I do right now, what we do really, which is kind of providing as much education to as much people as possible so that people can take a little bit more control over their own finances. That's where my heart is at the moment.
Nice. Yeah, me too. Yeah, I love doing what I'm doing. I just want to build my own business. I've really fallen in love with the whole idea of creating your own business, being your own boss, doing your own thing. And especially when you just see like the harder you work on it, the more you get out of it. I mean, that's just like the biggest motivator for me. I'm like, oh man, I'm going to put everything I got into this thing. And, you see that direct correlation. Literally I put more hours into, making my videos better or making that next profitable course or whatever. And you get rewarded for that. So yeah, I'm loving it. I love doing this sort of stuff, but I don't think, in all honesty, I'll work for someone else ever again. At least I hope I don't have to.
Yeah, me too.
I just love working for myself so much. It's just so good.
Yeah.
It's just awesome.
Yeah, I mean, certainly. Even if you're just making a small amount of money to know that you're the person that's at least coordinating everything. Obviously, it's not just you doing it, but you're the person at the top that's in control of all of the decisions creatively and business-wise. It's certainly nice.
Yeah, for sure. Can you see yourself doing anything really different one day?
No.
Just really out there, something that you wouldn't know? Not really?
No, not at this point.
Is there any employment opportunities where you'd go and work for someone else that you'd take now?
No.
Considering like you're working on your business, and is there some employer that could come out and say, hey, we want you to work for us? And you'd be like, oh, yeah, let's do it.
I don't think so.
Nah? Yeah.
Because I like with running a business that you kind of do a little bit of each, I guess, air quotes, department of your business. So you do a little bit of marketing and you do a little bit of logistics. You do a little bit of kind of everything. And you're kind of just managing all of these different things. I like that rather than just doing the same thing consistently, I guess, and being like sort of one part of a larger organization.
Of a machine.
Yeah.
Yeah. No, it's pretty fun. Yeah, having your hand in kind of each pot, it's kind of fun. Yeah. Yeah. For sure. You certainly learn a lot, don't you? When you're trying to be a little bit of everything.
Yeah. Yeah. I mean, I'm terrible at a lot of things, but it kind of forces you to be good. I mean, one thing, I guess, creatively, I'm terrible. And you can see this by my very early thumbnails and things like that on my YouTube videos. That is just an area that I'm always terrible at, but I was kind of forced to get better at it. And I think I've gotten a little bit better, certainly nowhere near what some people can do, but it does. It kind of forces you to face things that you're not very good at. I can't remember. I was watching some video the other day of someone saying that they spend more time on their title and thumbnail than what they do for the actual video. Oh, that's ridiculous.
I'm like, man, that is backwards.
That's wrong.
That's so bad.
I
can't even remember where I heard that.
How could that work over the long term? I mean, I would love to think that the content wins over the long term, like putting in effort to the content.
Sure, it would have to.
But
yeah, especially because, I mean, yes, you can get a cheap view by kind of clickbaiting and having an intriguing thumbnail, but I think YouTube's got it right. They got to focus on watch time. If someone's clicking on that video and within 10 seconds they're out of there, then that video should not be getting pushed. But if a video's got like heaps of watch time, then that video is clearly being watched by a lot of people and for a long time. So it's clearly good content.
Yeah. Yeah, exactly. Yeah, so, I mean, it's certainly a combination of how many people are enticed to click and then also how long they stick around.
How long you keep them for.
If you can, I mean, no one really knows what the algorithm does, but it seems to be if you focus on trying to nail both of those two things, making the thumbnail and the title enticing and then hooking people in the first 30 seconds where like typically 10, 20, 30% of people just drop out anyway. It's funny.
That's something I was really surprised at looking at. Sorry, I interrupted you there.
I was just going to say what you were about to say. It's funny that because we can sort of see what percentage of people are watching what percentage of the video. And there's always a significant percent of people who drop out relatively early within the first 2 or 3 minutes. Kind of just shows that people's either they just don't like the content, which is probably, I guess, most of it, but also maybe a lot of people just have really short attention spans and they just click from video to video to video.
I'm looking at my audience retention chart for my latest upload and I've got by how long? Okay, so by 16 seconds into the video, I've only got 80% of people still watching.
How far in?
16 seconds.
16 seconds. Let's have a look at mine.
Yeah, 16 seconds. I've only got 80% of people still watching.
Yeah, mine's exactly the same.
And then I hit 50% retention at 6 minutes and 30 seconds, which is about normal. Yeah. Usually the average watch time is about 6.5 minutes.
Yeah, it's very interesting.
Is yours about the same?
Yeah, I'm looking at my latest video, which was a 23-minute video, so it's probably a little bit abnormal, but it was at about, it hit 50% at what, 8 minutes or something.
8, okay.
Oh, actually, that's good. This one was really good. This one, actually, it didn't hit 50 until 16 minutes. It was in the 50s for a while.
Oh, that's awesome.
That's a really long video though, so that's not typical at all. If I look up like a 10-minute video, it's probably like 4 or 5 minutes.
Don't you just love it when you see your video and how it tracks views over time and it's just exceeding the gray normal area?
Yeah.
Don't you just love that?
Yeah,
that's just the best feeling.
Yeah,
because we get this chart where it's like there's a gray range of the normal amount of views you get for the amount of time that video has been out for. When your views are up higher, then that's such a good feeling. And when you get that viral video and it just skyrockets away from that gray area, you're like, oh yeah.
Nothing better than that feeling for someone who creates YouTube content.
Yeah, actually though, everyone at home is just like, man, can you just please keep talking about investing?
Wow, this podcast trailed
a young YouTube podcast now. Anyway, I think that's all we had for Q&A for this week anyway.
Yeah, we can wrap it up.
Should we round things out?
Yeah, thanks everyone for listening. And as always, if you have any questions, then head over to the YouTube version of the podcast at youtube.com/. Oh my God, youtube.com/ I missed the slash / I was so keen to get the in there.
You were too keen.
YouTube.com/ The Young Investors Podcast. Click on the latest video and leave us a comment there with your question. If you can keep them short, that'll be great. Thanks everyone for tuning in. Thanks to Sharesight for being our sponsor this week. And of course, thanks Brandon for joining me as always.
No worries, mate.
And we'll leave it there. We'll see you guys next week.
All right, see you guys.